What's going on, guys? It's Brendan from Market Makers. I didn't want to do an intro today. I'm not in the mood for it. Given, the senseless acts of violence that have happened, Charlie Kirk's assassination, Irina on the train in Charlotte, which everybody's seen on X multiple times now, being killed by a degenerate that's been arrested 18 times, of course, in a Democrat-controlled city with Democrat liberal judges that let the guy out every time. And Charlie Kirk, I have a lot of friends and family actually that have met him, some people that knew him, and he was an amazing guy, and it's such a loss for the country. And so I didn't feel like doing anything celebratory today. And to top it off, today's 9/11. And, I was working at the energy brokerage when 9/11 happened. I'll never forget the guy next to me was from New York, and his sister was in the building. And when he actually found out like 2 days later that she had been in the building. He was sitting right next to me, and that look on his face, that shock and horror look on his face, I think about him. I think about that look every single, anniversary of 9/11. It's really sad. So I thought we'd just cover the markets, and then I have my crypto video out, and then next week we'll be back on the regular schedule. I had some medical issues with my back. I had to spend a couple days in the hospital getting tests done. So let's go ahead and knock this stuff out. Looking at ES, guys, I want to look at a couple of things here. First of all, I want to look at, the predictions, what's been playing out here, what's most likely to play out now that we have the Fed almost assuredly cutting next week. When we look at this, I look at my prediction for the summer top. It was achieved. Actually, every market except Bitcoin that I was predicting would hit a certain level, hit that level for the summer top. The key thing is we didn't get very big drops here in the ES. We fell just 200, 250 points, and now we're breaking out to the upside. Obviously, this is because of the euphoria with the potential for the rate cut. PPI inflation came in lower, right? PPI inflation came in lower than expected, even with tariffs, which blows the mind of everybody on TV. They don't understand that tariffs are deflationary. They have been. If you look through U.S. economic history, you look at trueflation, you're at 2% inflation. That is the Fed's target. Now, don't confuse that with the aggregate inflation, because aggregate inflation is 24% or 29%. Wow, went up. So this is inflation compounded, since basically looking at this over the course of, we can go back on time. Oh, you got to pay for that. So over 1 year, you're looking at 29%. Oh, this is since January 2020. That's what I thought. So basically since the pandemic at 29%, that's all inflation compounding, right? This is what they downplayed when they said, oh, inflation's falling. It was at 9%. Now it's 7%. This is great, Bob. Yeah, everything that you buy has elevated in price. But don't confuse that with the current growth of inflation, right? The rate of change. That's what the Fed's target was, 2%. Now in the US CPI, a third of the CPI is housing. And housing is actually at inventories at an all-time high for the next to the GFC. And housing is not actually housing in the CPI. You guys heard me say this many times, but it's owner's equivalent rent. It's a bullshit calculation. The ECB, the European Central Bank, doesn't use housing in their inflation prints, which is why their inflation looks lower than ours. But if you take housing out, you're right at about 2%. So we're getting cuts. And you saw the massive job revisions, 911,000, setting a record, the highest job revisions in history that have occurred now with that revision. Remember, under Biden, you had the second highest of 800,000, and this is 911,000, which is Biden's last year in office. Hence, they were cooking the books for the election cycle. And so we know the labor market is weak. What will bring down inflation ultimately? Just like the GFC, just like in .com. But in the GFC, inflation slowly creeped up to 5%. As Bernanke kept cutting, inflation was going up. But what ended up happening? A collapse, and inflation went negative, -2%. So I'm not worried about inflation, because eventually when you get the blow off and you get the massive sell off through 2026, you're looking at deflationary event for that. So let's look at what's going on. We have an inflation rally going on right now, or inflation cut, we have a cut rally going on right now. The Fed looking to cut rates. So let's just look at this through the lens of some indicators as well, because how durable is the rally? That's what you want to look at. We broke out of this rising wedge. You know, I was looking for more downside. You had to break these levels to get this downside, because my overall theory, of course, as you guys know, because I've been saying it for months, is that we would achieve a level, you get your pullback, you get your rubber band, then you go to the blow off. I still think that's going to happen. But what I think the difference is that obviously the timing has changed with the market rallying into the cut. Okay. But when we look at this from a Fibonacci standpoint, and we can just pull your fib here, guys. If you want to look at this from your ratios here, go to your February high, all the way down to the terrified sell-off. We got above the 65.29. Remember, my target for the summer rally was 64.36, 65.22, which we hit beautifully, but we just got these little sell-offs with higher lows, higher highs, and some co-equal lows, and now you're getting the breakout with the idea the Fed's going to be cutting. But when you pull your fib that way, this is the beauty of Fibonacci, lining up to my macro pattern. What were my targets for the blow-off? 7,000, 7,500. It's the same levels you get from pulling your fib from February down to April. Do I think we can get to 7,000? We're at 6,600. I mean, it's possible, but what I want to show you guys this, on this rally, I mean, without a pullback, but what I want to show you guys is what I'm looking at here. When I'm looking at my DVD, my delta volume divergence indicator here, and this is something I'm looking at, you have to break out above this higher level. You can see you had the coil. Coiling is such an important concept in trading. I don't see enough people talk about it, but this is the whole principle of the Wyckoff range, right? If you break up above the range or below the range, you had a nice absorption line. This is a market makers indicator. If you guys want to check it out, you can check out our services. You can join YouTube, and or you can join our Discord. Follow me on X as well. But if you break out above this higher level here, this is what you'd be looking at as a move to the upside if this was going to have a lot more volume to it, right? This is buyers minus sellers, very simple calculation. But you see your momentum, my Sigma momentum, is starting to turn up as well, trying to cross bullish. You look at your money flow, you're not overbought on the daily, but you're in that upper band. But the key thing is here too is breadth, okay? And we're gonna look at some individual stocks here to really gauge this. But when you look at the breadth, you're at 40%. 40%, 42%, not 42% above the 50-day moving average, 42% of the S&P 500 above the 20-day. So that means 6 out of 10 stocks are below the 20-day. As I've been saying for weeks now, this is the same pile of money, in my opinion, rotating around to different assets. Look what they did with Oracle. We're going to look at that chart as well. But you do get, when you have nobody selling, you can have fewer people paying higher prices, and this thing can keep going up. When I look at some other indicators here like fear and greed, guys, I mean, you're still in neutral. I think when you have the blow off top, you will be in extreme greed. Picture 2000, picture the GFC, picture 2021, picture 1929. You're in extreme greed. You're not meh. You're not neutral, like, I don't know about the markets. You'll be in extreme greed. So can we keep grinding higher? I mean, obviously the answer is yes, we can keep grinding higher. But to get the ultimate blow off top, I think we need to be at those higher level tops when we're looking at this here on the chart. So this is what I'm looking at here, 65.29. You cross that at the 1272. That next major level, 7,000. Can we get up to that level? That's the key. Will we sell off with the actual cut? Will we rally, like a pseudo rally for a couple days and sell off? If we want to measure this range here, the tighter range on ES, we're coming up to 66.10. That's the 1618 of this tighter range, this breakout of the wedge. 200% would be 6,700. Obviously, 66.10 is only 20 points away. 6,700 is totally reasonable too for some type of topping action and potential pullback, and then a spring up to that 7,000, 7,500. Largely think, especially when we get to the NASDAQ, it's going to track close to Bitcoin because that's what it did in 2021 as well. But the ES, remember, continued to go up. When the markets, when the NASDAQ, Bitcoin, Russell all topped in November, ES went up into January, first week of January, perihelion day. That's when it went up to. So we want to watch these levels just above you. Obviously, to get weakness, you need to take out levels, and that's not on the agenda, Brenda, right now until we can get to the cut day. So you have to get to the cut day, see how the market reacts once we actually get the cut. Do we make a little top and then start selling, or does it just keep grinding up? But I need to see that money. I need to see the breadth really pick up here. You look at the spider, same thing. We got to the reversal zone. kept crawling up, higher highs, higher lows, getting a little bit of a breakout. My spider targets right in line with my ES targets are 700, 750 for the market tops here. And again, we're at 657, rallying into the rate cut. We got to see what happens next week with the rate cut. If that is a sell the news or sell the event type situation, we have to see how that plays out. We look at some of our indicators here on the spider. Again, you have a volume divergence on your Desmond volume delta here. So you still have divergence. You need to take out this line. Money flow looks good, but again, it's just nobody's selling and you got people buying. I'm going to show you that in the stocks as well. You look at the Qs, still in the reversal zone, 580 to 588. You're at 584. Qs are struggling a bit, just like Bitcoin. I mean, when I say struggling, they took out their all-time high, but they're not elevating at the same rate as you're seeing on the NASDAQ right now or the Dow. So 580, 588 above that's 597. And let's go ahead and continue. If you want weakness, you got to stay below 580 to revisit potentially these lows. But again, not till next week when you get through that. We look at the NASDAQ. That's what I really want to look at because this was largely a tech rally. We're looking at the NASDAQ here. And again, 23,913, we hit it beautifully. The 1618 is 25,941. So basically 26K. You're at 24K. With the rate cut, could you just go to 26K? Again, if I see fear and greed, leave neutral, go to extreme greed. If I see the moving averages on the market breadth really start to tick up, then yeah, I think we can be grinding up to that blow off top. But until then, I think you're looking for a top and a drop to get to the blow off top. It's just my base case. It's what I'm comfortable with because it's what makes sense to me. If we look at the NASDAQ and we look at market breadth, just like what you have happening with the S&P, the NASDAQ, only 39% of companies out of 100, right? Only 39%. So basically 4 out of 10 companies are above the 20-day moving average on the NASDAQ. So we're going to look at this closer at the Mag 7, and you can see on the NASDAQ, we're starting to get my Sigma momentum wants to curl back up. You look at your Desmond volume delta though, again, buyers minus sellers, you need to take out this line, which you're trying to do right now. You have an absorption line with your beautiful W pattern that you formed right here, your W fractal, and then ultimately you got to take out that high on buying volume to come up higher, I believe. But let's look at this again here. What we got, that actual price level be 24,068. If you can keep grinding up higher, let's add the 1272 here so you can see we hit this target or coming up to this target. If from this tighter trading range here would be 24,352, so about 350 points higher. So you want to watch this. These are your next 2 key levels if you do break out and start grinding higher. 24,3, 24,7. If we look at this on the Russell, the pattern I think everybody should be paying attention to, which of course nobody is because everybody's going to be hyper bullish with the rate cuts for small caps. But this is a triple top going back to November 2021. Showed you guys this previously on the Dow. It played out beautifully. And then now you have it right now in the Russell. You're entering that reversal zone of 2400 to 2480. You're at 2414. If you get hung up here, let's say you rally with the rate cut, you get hung up there, 2480, 2500, look for some type of pullback to come back down, base, and then go up for your blow off. This is how triple tops play out. You typically, these are high performing patterns. It's not a guarantee, but you typically pull back for the breakout on the 4th attempt, not the 3rd attempt, right? But on the 4th attempt. So you want to watch that move towards 2480, 2500 to see if this plays out because there's a couple nice potential trades there. If it does play out for some type of retracement before the blow off, you have a short opportunity and obviously a long opportunity as well. If you look at the DAX, again, another market that hit my target beautifully, 24,628. Got there, sold off 1,000 points, and you are just flat. Look at that. I mean, you're just flat. Everything's just waiting. This is a coil holding higher lows, as you can see, right? You're holding this higher low structure, so you're compressing. If you break out to the upside and take out 24,628, ultimately for that blow off, I wanted to see the DAX get to 29,777, right? That's a really nice run. That's another 5,000 points higher if it breaks to the upside for the actual blow off top. But again, with the US markets pushing higher, you would think you would see the DAX, which has been massively running up ever since we had this nice doubling in the market. Literally, I mean, like almost to the dollar. Beautiful ABC play out right at 24,628, a doubling off your pandemic low to your November 2021 high, essentially brought you to 24,628, and you're holding the structure. If you start breaking down 23,450, 23K, then this thing's coming down, right? And that would be a bad omen for the U.S. markets because that could be what's to come. Let's look at the Shiller PE real quick. We're at 39.24. Again, the second most expensive market in history. If we take out over here the .com bust, right, which is like, I think at 44. I don't know why the mouse won't go on it, but it's at 44, which I think we're going to take this out with the blow off top once we actually get to that level. But we'll see. Can you just keep grinding up? That's what we're going to look at the individual stocks here, because this is the big monster. This is the NVDA. This is 10% of the NASDAQ 100 is this one stock. And this is 8% of the S&P, which is 500 stocks. It's all right here. We had the breakdown below 168. I told you guys, if you stay below 168, it's bearish. If you come back into it, which you obviously did, I think part of this was Oracle with their cloud services, how they destroyed estimates there. Oracle went up. We have that to look at as well. Oracle gapped up massively, like 50-60% off of the low. And NVIDIA came up as well, but your all-time high is still up there at 184. So again, I'm looking at this. This doesn't look to be any type of breakout yet, right? You could actually come back and fill that gap, but you could break out. But this is what you want to look at. Bullish above 168, bullish for the markets, continue their grind. Bearish below 168. We look at Amazon. Again, you need to take out 242. It has been bullish. Look at your trend. There's your high. There's your low. You have a lower high, but you still have a higher low. And now you finally got a higher high. You're trying to hold a higher low. Amazon's trying to do that and take out 242. Okay. If you start seeing the mega caps, so you're not seeing Amazon rally right now. If you start seeing the mega caps all rallying, NVIDIA taking out its all-time high, Amazon taking out its all-time high, you see the volume pick up, you see the moving percent for the breadth of the market pick up, then you have a journey to the blow off top. But that's not what you're seeing right now, with only 40% of the NASDAQ and S&P above the 20-day moving average. Very low percent. You look at Apple, they released their new products, and what happened? Apple's just holding support here at 225. You're bearish below 225. If you can hold it, you need to get above 240 to take out 250 to get to 260, okay? But right now, again, sideways on a lot of these mega caps, okay? Bullish trend, low, series of higher lows. You have highs in here. Bullish trend, but sideways for now, even though the NASDAQ's moving up, S&P's moving up. You look at Meta, another one of the Mag 7, still off of your high, just doing your coil, going sideways. You're between 763, 724, ping-ponging back and forth. If you start seeing progress and the Mag 7 starts moving, you know which way that market's going, guys, and that rate cut is next week. Let's look at Microsoft, same situation. Got up to 557, sold off almost down to 491, something like that. You're at 502, going sideways. So you really need to see these pick up, I think, to get the blow off top, which is why it just makes more sense to me that we're going to hit a certain level, get a retracement, then get the blow off top. If we look at Tesla, exited our triangle here, and it was a bullish exit. You're still trying to grind up higher. You took out that 357 fractal, which is good. You need to get above 357. You need to get above 367. If you do, 393, 426. Next two targets in line, right? You look at Tesla, though, you need to get this volume. Again, you need to see the volume break out. You need to see your volume break out. Momentum's there. Same amount of money, rotating assets, Tesla catching a bid. If we look at Oracle, this was a huge gap up off that low, 58%. The levels to watch on that are 323 at 200%, which you did get above, obviously, but you came right back down. You got up to 345. You're at 314. Right now, 323 is a 200%. Guy on our Discord, he just nailed that top. He nailed that top right there. So he has a nice little trade on right now to see what happens here with the Oracle. But just keep in mind, that gap is down there at 243. So levels below you, you really want to hold 300, right? So you want to hold 300. You're at 314. If you start losing 300, you can come down deeper. But overall, just in general, even though only very few companies, only 40% of companies are above their 20-day moving average for market breadth, You have to understand when the market's grinding higher, you usually don't see massive retracements and things unless some type of idiosyncratic story. Palantir hit its high up there at 190, sold back off down to 142, and just like you're seeing on the mega caps, chopping sideways. You got above 162, next level of resistance is 184 beneath you. Important to hold that 142 level. As you can see, you had some support there. If we look at this on Hood, Hood finally hit my target of 120. It's above it right now at 121. 300% off the April low, okay? 300% off. So if Hood can stay elevated, my next target's 152. If you get the rate cut and the market just wants to go straight up to the all-time high, I'm watching Hood to see if that goes to 152. If not, you might get some type of elevation, maybe in the 130s, and then you see some type of topping structure, and then you see some type of pullback, basing, and then the blow off top, which makes more sense to me. But again, that's just my opinion. We have to look and see what happens. If we look at CAT, this is a cyclical, heavy industrials, open scissor pattern. Again, another high performance pattern, so I'm watching it. Looking at CAT here because we have a trend line up here on the open scissor in the low 440s. And if I look at how CAT's topped here, typically what you see play out here, if you're going to look at this from a wave count perspective, is you see something like this, right? So you're looking at CAT, you get 1, you get 2 when you have an open scissor pattern, you get 3, you get 4, and the 5th wave is the wave that takes you back down towards the other side. So want to see how CAT tracks here. What's interesting is how it previously topped here at that second wave. You had a wave up to the trend line, sell off. Midpoint, sell off with a higher low, hit the trend line again, then you got the larger breakdown, right? What'd you do here? Wave up, then you have the sell-off. Midpoint, didn't quite hit the trend line this time. Higher low, have your W fractal. Let's see with the rate cut, if you come up, I would love to see CAT back in the mid 440s or up to 450. That would be nice. Let's pull a trend line on this. Just giving you guys some trading ideas, things that I'm looking at as well. So 1272 is 450, 1618 is 462. Could you see CAT being a cyclical and industrial with rate cuts? Could you get a bid there? People get really excited. Yay, we're going to be building a bunch of things. Watch 450, 462, because ultimately if this pattern holds up, you can have a very, very nice retracement. You can pull a fib down there from your wave 3 up to 4. Actually, you'd be pulling it up to here, wherever this level ends up being. But for now, you can pull up from 3 to 4 and see what these levels are. It could be a very nice retracement on CAT. And I think that's it. I'm going to go ahead and put the crypto video out, guys. Hope everybody has a great weekend, and we'll be back on a regular schedule next week.